This podcast is brought to you by the Resolve Long Horizon Investing Masterclass, a 10-part evergreen podcast series where Adam Butler, Mike Philbrick, and Rodrigo Gordillo of Resolve Asset Management Global explore an advanced investment framework specifically designed to steward quasi-permanent capital with humility and balance. From the science of decision-making to all-weather portfolio construction to the value of diversified alpha and tail protection, this series provides a comprehensive capital management roadmap to improve outcomes for wealthy individuals, advisors, family offices, and institutions managing less than $10 billion. To listen to the series or read the transcripts on demand, please visit investresolve.com/masterclass. Alternatively, you can find it on your favorite podcast player by searching for Resolve-Masterclass.
Hello.
All right, good Friday afternoon.
Welcome all to our live cast with one of my favorite people, David Fauci, in the crypto world, a co-host Mike Philbrick, and I guess Dave, you're a co-host today. So, we are. Last time we interviewed you, we started talking about interesting people, and you said you have to talk to Tom. You have to bring Tom on the podcast. So, welcome, Tom. Looking forward to hearing what's top of mind for you these days, a little bit of your past and so on. But Dave, why don't you introduce yourself?
Well,
or I guess Mike, you want to do the disclaimer first.
Yeah, right? Before we start, everyone, this is not investment advice. Don't get investment advice at a Friday afternoon happy hour from four dudes on YouTube. Cheers, gentlemen. I am enjoying actually I'm doing something quite unique today. I'm doing a cold brew coffee with vanilla rum. It's quite hot here, and I'm like, cold brew is quite a mix. You want to be awake whilst you're feeling your alcohol buzz. So it's fantastic. Anyway.
I got a classic Moscow Mule in a classic Moscow Mule container.
I love that. I've learned that a French mule is just simply taking the Moscow, which is the vodka, and changing that to brandy. And there you have a French mule.
Who knows?
Right.
Thomas, what are you on? Something Italian?
No, I'm on a gin and tonic.
Oh, me
nice.
too.
Getting the quinine in, just because of those Italian mosquitoes out there, malaria in Italy.
Does that help with the? Yeah. No, I. To be fair, I had a poolside aperitivo, but no, I'm on a gin and tonic now. I don't have anything fancy at the house.
All good.
A gin and tonic made well is awfully fancy, sir. Cheers.
Yeah, with the right gin, it's quite nice.
Yeah,
I'm a little jealous.
Tonic
of the cold
water
brew.
too. Yeah, it's not a bad call. Stumbled across.
Anything with cold brew, I'm down. Someone on Twitter was making fun of cold brew today, and I was just like,
"What? Well, we should watch it.
I can't get behind it.
All right, like the nitro stuff, it's just great.
Yeah.
I love the nitro. I love it all. I mean, it's like rocket fuel. I love it.
FinTwit too.
Isn't it like 5 times more caffeine than regular coffee? I haven't tried it once,
Is it?
And I won't touch it. I
It's
just can't
so
imagine
good.
myself in that much more caffeine.
Yeah. No, you got to try it once and see how you feel.
It's
Maybe
legal.
yell at
It's
your
great.
kids.
Yeah, it's not going to kill you.
Yeah.
It's legal and it's great.
I did a poll on FinTwit to find out where people got their caffeine, and 75% of FinTwit gets it from coffee. So there you have it. Not many teetotalers and whatnot.
Yeah. It's funny. There was a restructuring that happened recently. David's Tea.
Brilliant.
And Mike and Rod, I'll notice it. All of my stories will start with a bankruptcy, and so I put something up about the bankruptcy. It's a CCAA, which is a Canadian bankruptcy, basically, or insolvency, if you want to be use parlance. And the pushback, people DM me. They're like, "Oh, tea sucks, man. I prefer coffee." I was like, yeah, but don't you understand? It's like, there was the guy that Wired Magazine wrote the article or wrote the book 10 years ago, like a long fat tail. I don't need everybody to be my cohort. I just need like a small cohort that is like rabid fans. And that's all I need to be a successful business. I don't need everybody to love what I do. But it was funny how much vitriol I got from people who are coffee guys. Like, "Oh, tea sucks, man." A lot of people went out of their way to DM me about how
I love it.
sucky tea was.
I love it.
Yeah, there's Bitcoiners and
Asia
then there's
might
coffee
have a slightly
snobs.
different view.
Right?
Yeah.
Bitcoin is fake, man. And by the way, T sucks too.
That's right.
Waiting
So
for one of
they
those.
probably like those people. Probably also like cats. Come on. All right. So
All
we've
right.
touched a little bit on the insolvency stuff and the bankruptcy stuff. So Tom, tell us a little about you, tell a little about what you do. You're a CIO at 507 Capital. Give us your story, give us your history. If people want to learn about Dave, Dave's co-hosting today. So if you want to learn about Fauci, go check out one of his previous casts with us and you'll learn all about him. He's graduated to co-host. So, but Tom, hit us with it. Tell us everything.
Well,
Start at the
so I
beginning.
grew up in a little town in Georgia called Savannah, which is on the coastline. My parents were bankruptcy lawyers, and I'm sure I was rebelling against everything my parents did. But my only advice for my parents, who were bankruptcy lawyers, was don't become a lawyer. So I tried to take that advice in, and I attempted to work in finance, and as part of the strategy that I was running when I launched a small hedge fund was to work on the small distressed opportunities. And I basically was working on the stuff that no one wanted to work on. So I was doing bankruptcy trade claims and working in small cases where large institutional firms were like, hey, that sounds great, Tom, like for your PA, but I'm running 100 million or a billion or 500 million or 10 billion, and that's just not going to move the needle for us. So I got kind of sucked in to working on stuff that they wouldn't work on. And then when something was more scalable, calling them up and saying, hey, I have this project, we might be able to put 50 million to work, might put 100 million to work. And that's how I sort of grew my business. And the hedge fund wasn't super successful because you never really scaled being an institutional sized hedge fund. But I guess I sort of pivoted. We liquidated the hedge fund, and now I work for a few large family offices and a few distressed firms, but principally one large family office. And we work just on these sort of, I guess it's esoteric, but it's not esoteric. It's really like SME, bankruptcies and things like that. So that's how I got kind of sucked in it. And David and I met through a distressed crypto trade because I don't know why. Who introduced us, David?
Stephen Keel.
Oh, it was Stephen.
Yeah.
But why did he introduce us? Because I was working on Mt.
We were
Gox.
both in crypto.
Yeah.
I think we were the two people that had mentioned Bitcoin to
I was
him.
like,
at
I
this
don't know
point.
anything about crypto, but I know two guys who are in it. Y'all should chat. That's how we got connected. And I could unpack that story if you guys want to hear it. It's decently interesting. But that's how I got kind of sort of connected with David. And I've gone down the crypto rabbit hole, but not like David. David's like a thoroughbred in crypto. I'm sort of what do you
You're
say?
like a hunting pigeon for like interesting, off the run,
I was going to say,
asymmetric, especially
sort
if
of
it's
like a
crypto.
dung beetle or something, just going around and shit and just making.
Well, Mike
No,
and
he
Rod,
does really cool stuff. You're onto
That's what
something
I'm.
yourself.
But in weird places, right?
In really
I
weird
imagine
places.
where you get the juice, and you've got to dig deep into the all the things that they say you should read before you buy something is probably I'm guessing is where you make a lot of your alpha. Here's your 700-page TLDR prospectus thing, and you're like, hey,
I think Thomas hears like the weirdest story you've ever heard of someone.
Well, yeah.
And they're laughing, and he's like looking up whether there's an edge, like if there's an angle. He's like, is there a bankruptcy here?
I mean,
Did someone mention the Titanic?
So why don't we take a step back and discuss what it is that you actually just generally do?
Yeah, sure.
Right?
Sure.
Like we've talked about bankruptcies. Why do they matter, and how do you monetize something like that? And then maybe we can get into specifics.
Yeah, so why do they matter? I mean, so I had a little bit of a unique background in the fact that my parents were lawyers, were attorneys and were bankruptcy lawyers, but they didn't know the stuff, they weren't like big time Kirkland and Ellis or Paul Weiss or, you name the firm, like, Shepherd Mullen. They were not big time bankruptcy lawyers. But as a kid, I grew up sort of hanging around the bankruptcy court, hanging out with, U.S. trustees and I think I had on my profile once, like I used to hang out at 341 meetings, which are creditor meetings. And I remember debtors counsel once chuckling and saying, I saw that you said in your profile you were hanging out 341 meetings waiting for your mom to come out. And I was like, yeah, I mean, that's actually true. So I put it in. Okay, so why I think it's interesting is it's complicated, it's complex, it's messy. It's kind of like, I think I'm not someone that's into special forces or any sort of SEAL team type stuff, but guys say like, when there's smoke in the dead of night, like that's like the best time, to sort of, run an operation. I mean, I kind of think it's similar, and you could draw, it's not really a corollary, but you could draw a similar idea that, in a securities analysis, like when there's a lot of smoke and there's a lot of, sort of just not misinformation, but sort of, lack of understanding about what might be going on, that's a real opportunity. So it's because people sort of, and people have said this before, but they sort of conflate risk with uncertainty. And so we sort of take advantage of the fact that people conflate those two things, I think. And generally what we do is we run a bankruptcy trade claim book for a large family office, and we also work on DIP loans. And we've brokered some claims as well. And in terms of very large claims, call it, 10, 20, 30, $50 million claims. And stuff like that, and sort of just making a fee on that. But for the most part, we're trying to put capital work for our family office in the trade claims. What are trade claims? Trade claims are accounts receivable in a bankruptcy. Those can be maritime liens. Those can be mechanics liens. Those can be general unsecured claims. Those can be PACA claims. Those can be anything in the 507 claims. That's where 507 comes from. 507 is the priority section of the bankruptcy code. Yeah, so okay. It's a little, I suppose it's a little tongue in cheek on 507 creditors are the creditors that get paid first in the bankruptcy. So it's a little bit of a play on that. It's like we get paid first. I mean, most even lawyers won't actually know the section of the code that specifies the waterfall in 507 creditors or 503 creditors, but that's what it is. It's a priority creditors, and I got sucked into it because it was, I sort of listened to my LPs when I was running my hedge fund, and they said, this is the only thing you're doing that is actually differentiated. And I was like, well, that really hurts my feelings because I'm doing lots of other stuff. And they said, yeah, that's great, Tom, but like no one's doing this for us. I mean, we're with big distress firms, but they don't do this little, kind of like, 2 million here, 5 million here, 10 million here, 2 million there. And they said, you should just focus on that. And I was like, okay. So I sort of did that and pivoted with my fund, and the returns were good from it. And when you looked at the attribution of returns, they were far superior to the other stuff we're doing. But it also might be a sentiment of the market. Like I don't think there's a value manager that's doing. I mean, maybe special sit managers can get by, but like deep value managers are probably getting crushed in the last decade or even maybe more. Now we can almost say more than 15 years, right? Or more than 10 years, more than a decade. So I was part of that cohort. And I love what I do.
It is a bit different, right? The deep value manager has got to wait for some catalyst in a public domain.
That's the problem.
So how do you attenuate that, or how does the maritime claims take us through maybe an example of how you would find a little thing, go through the process if it was big enough to kind of originate a group, like how does that all work if it's not, and then what's the the culmination of the end profit?
Yeah, sure. So like I would say that I do the bankruptcy trade claims to put food on the table. Like it's not ridiculously scalable, and that's probably why it works. I had this also theory. There are two theories that I'll throw out there. One is things that are not that scalable tend to work in terms of high returns on invested capital, and investing markets where you're just putting capital at risk. That's a great pool. If you just find a little niche and just like burrow at it. And the other one is like Venn diagrams with very little overlap. So that would be like how I met David, like the crypto, so you have special sit and you have crypto, and like the Venn diagram of people that know both and can do both or will do both is very small. And so just to backtrack on, just to backtrack on the first point, which anyway.
Do you remember the first point?
No, I don't actually. My gin tonic is.
Was it my point or?
Why don't you tell us about like how
Oh, right.
the intersection with
An
crypto
example.
and like.
Yeah.
Do you want to go into that? Okay.
Well,
So-
anyone, it's a good example because it would be fun. It sounds like it would be fun and topical because it's crypto, but it probably has a lot of the same fundamental underlying mechanics.
Yeah, I mean, it's basically, let's see. So I could unpack this for a while, but there are a number of crypto special situation stuff that's out there. There's cred that filed for the state in the States. It was supposed to be a DeFi project, but it was more like a CeFi project in the States. There was a crypto miner or two that filed for bankruptcy. One there was a CCAA, and there was one in Washington State that was quite interesting. We've been involved in basically all these, and when you look at these capital structures, the fun part about what we do is we're not just buying bonds and we're not just buying stock. When you know how to, and it's not that complicated, but if you were to source bankruptcy trade claims or try to get involved in like DIP financing or exit financing, DIP financing means debtor in possession financing, you can basically create your own security. And if you like the underlying asset, well, that can be even more sizzle, right? So like if you can sort of create the stake through where you get in the capital structure, and then you get sizzle in the sense of, upside on an asset class you like, in the sense of crypto, it can be very interesting. So I can walk you through Mt. Gox or BitCornica, which are two big cases that we're involved in. So like
those sound juicy. Hit us.
Okay, here we go.
Mt. Gox first.
So Mt. Gox. Okay, so you probably know Mt. Gox. You guys are, if you're involved in crypto. So Mt. Gox was a large exchange. It went under in 2014, 15. There was actually even guys that just wanted to buy crypto used Mt. Gox, but if you wanted to do it on leverage, you had to use a thing called BitCornica, which is in New Zealand. So we buy claims on Mt. Gox. We've been buying them for years. I've been buying for years. I put most of my net worth in these. The whole idea was, at the time, the original trade was you buy the claim, and on a look-through value on the estate, you're basically buying Bitcoin for a third of the price, right? So it's like the way I viewed it in my brain was, well, this is basically 3x leverage on Bitcoin. If Bitcoin goes to 100,000, like I'm getting 3x leverage on that, which is great because
non-recourse leverage too.
Non-recourse leverage, sure. Yeah, exactly. Non-recourse with no maturity, really.
Mm-hmm.
And so to me, I remember this popped in my head. I was like, oh my God, this is like the most volatile asset of all time. And yet this could take like 5 years to play out or 7 years to play out. Like that actually increases the value of the option. And
exactly.
Of course, I was sort of, probably getting ahead of myself. So I put a lot of capital in myself, but I also, at the time I had my hedge fund and we bought some, and then I got a family office involved in sort of buying claims. So that was a very interesting trade. So there are three parts and maybe this is true of a lot of what we do, which is there are different segments to the trade. So originally there was buying Bitcoin at a third of the price. Then in 2018, the trustees sold some Bitcoin, about a sixth of the Bitcoin. And then we could buy crypto. We were basically buying the claims where we were getting the cash value, and then we were getting a little return on our cash value, our fiat. I should use fiat instead of cash. And then we were getting the Bitcoin for free. And that was like the amazing time to put it on. So we put it on pretty strong. This family office gave us some capital. We really went whole hog. And that was the best time to put the trade on. And we were basically buying Bitcoin. I mean, Bitcoin was free, but effectively at the time, I think Bitcoin was at, I can't remember. I want to say like a few $1,000s. It was like $3,600 or $4,000 or something. And then, fast forward, we still buy them, and we buy them for probably about half price of what the Bitcoin is. But now we buy them for a large crypto hedge fund. So that trade is interesting, but I don't want to say it's over, but every trade has a life cycle.
Mm-hmm.
I was talking to some young guys that want to start a hedge fund today, and I was saying, what you lack in experience, I have slow decay going on in terms of my experience has like a decay factor to it. And you guys are so young, like you won't even understand any of that. Like you don't have the experience, but you don't have the decay. Like you're trying to figure out where the puck is going, and that's great. And but my point was that we put that on, and that was interesting. But that trade is basically decayed at this point. It's interesting.
Can I just pause for a second, because I want to make
please.
sure I understand and the audience understands it. So when Mt. Gox, got hacked, they recovered. They went to bankruptcy. They ended up recovering like 80% of the crypto back, or something like that. I'm not sure of the details.
25% of the crypto.
25% of the crypto. Okay, so the claims against that money is so it's. I imagine if you're still buying or recently buying that thing's still going. So they're still under bankruptcy.
It's still
Is that
going.
right?
Yeah.
And
the
what you were
still
buying
going.
was people that had claims that wanted liquidity, and you gave them that liquidity at a discount. That ended up being at the time 1/3 of the 25% that you would get back in Bitcoin. Where's that cash value, the fiat value, though? I kind of missed as to why you're getting an extra.
So what happened is 2018, when the first sort of run up in crypto, or I'd say the first, but when the run up in crypto went to like 20 grand, he sold about a fifth of the crypto at about a $14,000 value, US dollar, fiat to Bitcoin. And so there was about $600 million that came into the estate. And so if you were to take all the claims, because there's no real I shouldn't say there's no actual claims. There's no general unsecured claims. There's only, account claimants. There's only account claims. Yep. You basically take those and you cut them pari passu. On that 650 million that came in, we were only paying about $400 to $450 million, sort of enterprise value for the claims. And so our theory was like, well, hold on a second. We get the 200 extra, so we get a little profit on our claim. Plus, we get all the 4/5 of the crypto that's still left. So that was the play. That was the big play. And I was a bit of a skeptic, frankly. I mean, I was kind of like, this might work. This might be a zero, but the asymmetry is so amazing that I'm gonna put this on. I'm gonna put this on big.
It might work. It might not. Most of my net worth will go into it, but.
Yeah, that's what I did.
Yeah.
I mean, I'm a little bit of a sucker for.
It could work. How much you put in? All of it.
Yeah, all of it. Yeah.
All right. Sorry, I interrupted. You were going on to your next point.
So that was an interesting one, and then there's a sister docket, which I call it sister docket. It's not really that related, but it's called BitCornica, and it basically was if you wanted leverage on Bitcoin, you had to go to BitCornica, which is a New Zealand exchange for It's basically like, I think it was like CFDs, but it was kind of unregulated. Yeah. But let's just call it CFDs. And so there's a lot of sort of OGs. Is it OGs? David, is it OGs?
It's OGs.
OGs. Originally,
As in like the OG, like
original
the
gangsters?
Like original gangsters of crypto.
Yeah, the OG.
Yeah, original gangsters of crypto.
Just checking we're on the same page here. Okay, OG. Yep. Noted.
And yeah, we still buy those. I hate to. We bought one today that we paid a fourth the workout value for. So we're basically buying Bitcoin at 25 cents on the dollar. Now, there's risk, right? It's Bitcoin. The claims haven't been approved. The claim transfer process is like a real thing, and there's risk. So I don't want to. It's not a free lunch. I would refer to it as a cheap lunch, a cheap crypto lunch. Right. So we're basically buying Bitcoin at something like, I don't know, $5,000 or $7,000 or $8,000 or something.
And how long will that take to work out before it's
5 years plus? Yeah, 5 years.
Wow. Okay.
Yeah, it take time.
Well, that is great option.
You got to be a believer. Yeah, you got to be a believer.
Yeah. Yeah, so that is, like you say, as it takes longer to work out, your term is greater. It's awesome.
Good.
It's really
right?
interesting. Like, you think about this as an option, and wow, it's a bit mind-blowing.
A 5-year option? Yeah.
Yeah.
I wish I could convince an investor to think like that.
I mean,
but what would a 5-year
implied vol on
option
Bitcoin is like a 80
is
to
100, right? So it's 100.
Right.
We know what the basis trade was making was like 25 to 45% in the spring and winter. my God, it's obviously going to fluctuate. But yeah, here's a 5-year option on Bitcoin.
Probably
Yeah,
more.
yikes. That's pretty cool.
That's the kind of thing I
Volatility's
love. That's the kind of
collapsed
thing
in
I
Bitcoin in the
love.
last couple of weeks, though.
Oh, I know. The ball's
Yeah.
only 67.
My
Sad
favorite.
time. Sad
My
time.
favorite, David, did people do this to you? Rod and Mike, maybe you guys aren't as heavy into crypto, but I get people reach out to me like, are you okay?
Are you okay?
Is everything
Yes,
okay?
everyone.
Are you
everyone.
okay? I'm like, I think I am. Do I not look okay?
Oh, because of the recent drop?
yeah,
Calling my girlfriend and being like, "Is David okay?"
See, we have an entirely different set of friends. So me being, I mean, I'm a Gen Xer, so my friends are like, told ya.
Told
Eat
you.
it. Eat it. Told you.
My friends are totally told you.
Have fun being poor.
Maybe I should rethink my
That's
friend
so
group or
mean.
something. Is it generational? Is it just Gen X? There's such turds on
I
that?
haven't had anybody reach out with the, are you okay? Maybe they're maybe they're silently judging in the background. Probably. Too scared
like,
of the
you know,
pushback
it's-
they'll get.
It's still at $30,000. You know that, right? That's what I tell people.
Pretty great.
Yeah. It's too
Anyway.
funny. So you got this claim that might take 5 years plus. If at any
Yeah.
point you want, are there other players, Tom, that you can
No,
find liquidity
there are a
from?
few, but not a lot. So in Mt. Gox, there's Fortress, and there are a few brokers that try to sell them to hedge funds and things like that. And there's a little, sort of community of people that traffic in this stuff. I would say that when you're dealing with individual claimants, like this is part of the fact that my parents are bankruptcy lawyers. Like we get involved in Ponzi scheme cases and all kind of things. And this is the same thing. Like these guys were right. They were early. They were into crypto. Some of them they were like, after Mt. Gox, I didn't buy another Bitcoin. I swore Bitcoin off. You get a lot of people like that. I guess my point is you try to show them as much respect and just try to be as good to the people as you can, in terms of straightforward and this is what we're offering. This is what we think it's worth. And there's no funny business. And, for the most part, people respect that. Some people are like, no, that's ridiculous. Why would I sell for half price and things like that? But there is a little brokerage community of people that work in this stuff, but it's not big. And, my problem with the community is they're super unprofessional and they're not, you just don't treat people, in my mind, they don't always treat everybody with dignity. And that's what I have a real problem with, which is, these are individuals. Some of these guys, the guy's a computer programmer. There was a guy that we're buying a claim from now. He makes software for shock absorbers. He's just a software nerd, engineer, and $200,000 is a lot of money to him.
Yeah.
And anyway, so I have my soapbox about this, but I think it's just important to treat some of these people with dignity when you're trying to either solicit them for selling the claim or give them options for what they might own. But there is a little community of people.
No, for sure. Their liquidity is a lot.
So that's part of the process is originating and finding those who own the claim and then negotiating with them. It's kind of, so there's no public market for this. There's a few brokers around and then you got to just hustle or.
Yeah, totally. There's one firm, or maybe two firms. There's one called ClaimX, and the other one, if I don't remember to mention the name of his firm, he's going to kill me. I can't remember the name of it, but
we'll
it's
edit this out. Oh no, we're live.
Edit this out. And
Well, if he's listening, throw it in the comments and like and share out there too. While you're commenting.
What's the name of Vlad's firm? Anyway, he runs a thing called Cherokee. I actually like him. He is really straightforward with people and very this is a marketplace, will give you the best price. So there's two firms that basically will provide an exchange for this stuff, Mike. But it's not on this, not on crypto bankruptcy claims. So So I like the idea of making market. I think this is probably a perennial idea of business, right? Like making markets where there aren't. And that's basically what you're doing. You're sort of, providing liquidity or making markets where there were none. And,
Are you seeing, go ahead, Rod.
I was just going to ask, how did Dave, like, you go to David to kind of help you navigate the world of crypto first? Like, how did you guys collaborate on this
didn't
thing?
I called David. I said, Dave, teach me the ways of the crypto. No, I think I was trying to get money out of David at the time. I don't even know.
Why you? I didn't even
No,
know
I
that.
wasn't. No, we just met as a friendly.
Yeah, Tom basically invented this trade. He's being very modest, and then brought it to some other people who then kind of carried it forward. But yeah, by the time we met, I remember you as being sort of like, yeah, okay, maybe on the Bitcoin thing, like we'll see, but I'm buying it below cash, and like it's just a big option.
Yeah.
And now you're like hounding out every crypto special sit.
Yeah, that's true. Actually, we've done.
So,
Like Tom is the guy you call.
Tom's a box.
Done a phenomenal job kind of networking in this space.
I'm not smart enough to understand everything going on in crypto. But if it's crypto and it's like kind of special city, maybe with some insolvency around it. Like we've gotten involved in a few. We've got involved in Indian,
You should tell that
Cointopia,
story. That's a good one.
Cred.
All right,
go
Indian
ahead,
was the
Ian.
good story.
That wasn't
Is
that
the
good.
one,
So I
Dave?
mean,
which one was the one?
It's a good example of like no one in the world would do this, but
Right.
like tell them how you accumulated
Well,
it.
this
and,
is the Venn
running
diagram that
through
you
the
referred
docket
to
and stuff.
earlier, Tom. Right, the Venn diagram
right.
you referred to
No,
earlier. It's tight.
yeah.
So yeah, walk through it. Like Dave said, give us. The
Okay, so
scoop.
this wouldn't make any sense to like an institutional firm, and we only made it work because we put our own capital in, and then one of our family office that we did Mount Gox with put some money in because they were like, all right, Mount Gox really worked well. Like you got some money for this, and so long story short, they were supposed to be like mobile mining units, and they raised money through I think the Swiss regulatory system, like FINMA or something. I can't remember the name, but it was like a German and Swiss company. And long story short, they raised money, and then there was some dispute between the founders and the guys that helped them raise the money. And I guess in Switzerland, if you don't get an audit passed by a certain date, you immediately get pushed into liquidation. So the company gets pushed into liquidation, PwC becomes the liquidator, and there's a token. There's an ICO token that's out there. So like for the enterprising investor, I think this is fascinating, which is like there's all these tokens that are floating out there. Some of them are super interesting. Maybe they're nets. Maybe they're cheap on cash flow. Or that's like you talk about Binance, or you can talk about any other like DeFi token. You can go into things like Nexus Mutual, which is like DeFi insurance, which is very, very cheap on book value, considering the growth. So yeah, exactly. So it's a recontextualization of traditional, sort of not net, but just like value ideas, but on crypto. And I think that's fascinating. And so Indian is that basically it's a liquidation. We bought the tokens for a fifth or maybe even a sixth of workout value. We bought tokens in the open market, and then we negotiated a block of tokens from a large seller. And it's basically just Swiss francs in the bank. I can't remember the exact number, but 60 million Swiss francs we bought for like maybe 12 or 15 million was the valuation we bought. Now there's going to be burn from the estate. So, PwC is going to do a great job of doing the accounting. It's going to cost a pretty penny. But once it's all over,
Nice and diligent.
we should get, very diligent. I mean, don't get me on my soapbox about American bankruptcy professionals. So anyway, no, it's an interesting situation. We'll definitely make a few multiples of our money, but it was incredibly unscalable. We thought we were going to try to buy a few $1 million worth of this. We only got on like, I think $400,000 in the end. So it was very, very small. So I don't want to act like this is like a free lunch because the stuff is hard. It can be hard to scale. Mt. Gox worked because it took a really long time, and because over time we were able to buy millions of dollars worth. But in some of this other stuff, like that's what you get. You get a dry hole. You spend a bunch of time. Just like you guys, you're building a product. This is a great product, but no one cares, and you can't scale it, and it's not scalable. And so you move on to the next thing. But it was still a good trade, and we'll definitely make money on it. But
like building that position is like Envy on the token was trading on one exchange that at least that I know of at the time that you could go on to buy it, and it was the dodgiest exchange I have ever come across in my life. And I've been like in crypto since 2012. Like there was some pretty dodgy exchanges.
Dodgy.
It was like a
50,000.
Russian, dodgy as hell, like pump and
dodgy.
dump community with some sort of exchange attached to it. So it's like you could put like half a Bitcoin on and you just sit on the bid. And you probably sat on the bid for like 6 months and you just sat on the bid and like bought what you could and just like round tripped it. And like every time you got some NV on, you pull it out, you put a little bit of Bitcoin on and you just sit there and wait. Like who in the world as a professional allocator is going to go and like buy some Bitcoin, put it on this like crazy exchange and then just kind of like suck all the NV on you can out? It just falls between kind of the Venn diagrams. Like there's no one doing that. And therefore it's an incredible opportunity because it's I think it was an incredibly like it's a very simple bankruptcy. Like the Swiss regulators took over like a bunch of Ethereum basically like 3 days after an ICO, and then they sold it all. And then there was a legal dispute which I think is solved, and you have like a Swiss bank account with 60 million Swiss francs in it and nowhere for it to go, because usually, you know, you might say it goes to the equity holders, but the equity holders are the people that ran an illegal securities offering. So like it has to go back to the token holders, but there's 30,000 token holders that participated in an ICO in 2017 who wrote this off as dead. Like a guy in Tokyo and in Seoul and a guy in Argentina, and like
I have no idea what's going on in the background.
People? Exactly. How do you go to these people who are all anonymous and tell them, hey, there's like a bankruptcy going on. Here's the paperwork you need to fill out. It's really sort of falls between two completely separate universes.
Yeah.
In BitCornica, the trustee, like the bankruptcy trustee, I mean, it's not a trustee, it's an administrator, bankruptcy administrator. He doesn't even have like people's real names. All he has is like their email. And they're like suited, you know, whatever, their like username. And it's like, okay, like how do we legally pay people when all it is an email and a username? There was no KYC AML. This is when Bitcoin was like $5. So stuff like that. But I agree with you. I just, you know, for myself, the angst is always a fine balance between like incredibly interesting and totally a waste of time in terms of scalability, you know?
Yeah.
So, but it's a tough balance.
Certainly, we found in our exploration for alpha that most of those outstanding performance numbers come in low capacity strategies, right? Where you're looking for that 5 sharp is low capacity. You're not going to manage $10 billion on this idea. And it's just why so many single family offices are constantly looking for that type of alpha. And they want it all when they get it. Like you're probably, like you said, most of it is that one family office trying to help you with liquidity. That makes 100%. That makes total sense. You know, this idea that I grew up with, that when I grew up in the business, that active management doesn't work and hedge funds don't make any money. I'm like, yeah, no, the $100 billion hedge funds don't make any money. And then there is the unique few that are taking all of the money for themselves, for their personal wealth, right? It's an interesting dynamic. It may not even be. I mean, what you're doing right now, I guess, is professional asset management, but it's almost like prop trading. It's prop trading.
Yeah, it's not that scalable. I mean, I would argue that like the only reason it works is because it's not that scalable.
Yeah,
I really think it. You know, and you know the one that the yeah. In the family offices that want access to it. I mean, you know, we meet a lot of family offices. I mean, for us, like, you know, we have a great relationship with a pretty decent size, you know, one to put capital work. But like even the crypto distress trades, like they're not actually even in that because that was a bit risque for them. I think you're better off spending your time.
Email and IP address. Yeah.
Yeah. Well. I mean, I put my own money into it. So look, you know, there's more to how we validate the claims. But yes, there is a little bit of an IP process to validate claims. But yes, I think that I think I was having this conversation with someone I think is a very sharp investor, and we were saying, you're better off just focusing on like the wild stuff, because it's the incremental stuff. Like there will be guys who will pick it up, and I'm not talking about you guys, like y'all have a business and you have your approach, but for me, who's just trying to find alpha, if you want to just like keep in the parlance of what we're discussing here, if you're trying to find alpha, just focus on the crazy stuff. Find something you know a lot about that's really crazy, and like just run towards the fire and see if you can figure out a way to make money in that. And if you can, then try to get someone to give you money to put it on, or put your own money into it. Yeah. And and if not,
it really is that comfortable with being uncomfortable, right? There's a reason, right? That there's a discomfort there. Even the family office you're speaking of, it's crypto. I don't want to do it. I don't understand it. Whatever the reasons are, which leaves the alpha opportunity for those who are willing to take on the whatever it is, reputational risk, career risk. I mean, we've seen certainly the digital asset space span that over the last 2 years. If you spoke about it in the TradFi world, that was very dangerous. I think we're on the other side of that now, where if you're not at least somewhat conversant and can have a conversation about it on behalf of allocators or clients, you're more at risk. And so, that spectrum continues to evolve as the Overton window in so many topics evolves. But like you say, run to the fire, right? That's oftentimes you're doing what? That's crazy. And that whenever I heard that, I'm like, I better do more of that trade, because there's not a lot of capital crowding out. Yeah. Now, what about Quadriga CX? Did you get anything from that? Or have you heard
we did look at Quadriga. The problem with Quadriga is when we did our work on it, we were like, well, this guy just spent all the money. I mean, it's like
background on what this was.
Not that interesting. Okay, so Quadriga, geez. Okay, who wants to get background on this? Does anyone know the background on this?
Well, there's a podcast right now the CBC put out that's called Death in Crypto Land. It's a 5-part series that everybody should listen to it, because it's a wacky set of characters, and they both met doing pyramid schemes. I talked about this in a previous podcast, but they met creating pyramid schemes on the internet, where the platform was a series of group of people putting whatever pyramid scheme they had, and people knowingly participating in these pyramid schemes, hoping that they wouldn't be the last person holding the bag. So it was like this casino. And they come up with these ideas, and it's the typical, like, I'm not going to tell you how I make my money. This is what happened on Monday. This is what happened on Tuesday, and whack, we are $10,000 out of nowhere. I have 5 people that can tell you the same thing, that they got also $10,000. So are you in or are you out? That type of thing. And so that's their origin story, and then it gets crazier from there, until the guy just goes to India to get married to his fiance, and all of a sudden he dies. But the when the girlfriend goes to get the coroner to claim his death, the doctor's like, I can't do this. There's a lot of fishiness here. So the first doctor wouldn't give her a death certificate until they found a doctor that would.
I didn't even know that.
Yeah,
it's absolutely
covered.
That's amazing.
It's a mini series in this. It's called A Death in Crypto Land. I think it's maybe 2 or 3 hours. So it's not like a novel.
It's not huge.
But and they go through the trip to India and all that sort of stuff. So they want to exhume his body, obviously, to DNA test
that's
and see
what I was
if it's
gonna say.
actually him, right?
So there's a body, but they don't know if it's him.
Correct.
Okay.
And so that sets up the claims. So you took a look at Quadriga.
We did, and we know a firm, Argo Partners, which is a decent competitor of ours. You can look them up. The guy that runs it is a very, very well-respected guy named Mike Singer. They bought claims in the case. We looked at it. They were basically buying claims at 10 cents on the dollar. I think in the this is fiat. In the case, the workout value is supposed to be 12 cents a dollar. So the idea was buy for 10, make 12, and then maybe if in the next 30 years they find some crypto, it's a free lunch. Right. And I think that was their play. I mean, if I was going to reverse engineer it, we kind of looked at it and we were like, there ain't no crypto. There never was any crypto. This guy bought a boat, took his girlfriend on nice trips, bought her nice purses. Yeah, bought a plane. there ain't no. It's not about finding the lost crypto addresses. It's about finding the Prada bag he bought for his girlfriend. It's like so I just kind of thought it wasn't that interesting, and those guys were really on it, and we did not get involved. We tried to, and we got a little boxed out. Like some of the creditors didn't like us showing up, which happens, and I fully respect that. People aren't crazy about opportunistic investors, showing up and trying to buy their claims and things like that. So I fully respect that, and that actually happened a little bit in that case.
This is interesting. It actually, I think, dovetails into a question we have on the YouTube channel. In general, what's the approach or framework to evaluating claims, and what's the typical margin of safety you like to price in these deals? That one you're talking about, Quadriga, seems a little skinny to me, especially in the light skinny. Of all of the other deals you took. So I wonder, Mike Coldwell's asked the question on YouTube. I don't know if Ani's going to show the question, but anyway, that's basically it. What's your framework for evaluating claims and trying to get a margin of safety for yourself?
Oh boy, it's all over the map. It really depends on the risk you're taking, and I actually think it's another one of my big theories. I guess Venn diagrams with a little overlap. I don't know, things that other people won't do. The other one is probably like the barbell approach. Even I'm sure this is true in a lot of other businesses, but in our own business, the cheapest stuff is on the very safe stuff and the very risky stuff. So the stuff that's really, really, really safe gets kind of like underpriced. I suppose it's like, almost like an option smile. You sort of have like this weird dynamic where like things on the tails get kind of funny. So you're like, why would I make 20% for just cash? And you're like, well, it's small, it's not scalable, and maybe there's IRR risk. And you're like, yeah, but there's no actual like risk, like principal risk. And so the other side of the dovetail is like these claims I'm talking about, these crypto claims, where you're making 4 or 5x, but it's real risk. I mean, that's
it's
like
not
some serious
fiat
risk
that you're buying. You're buying
Bitcoin.
No. Right. So
You're
you mean the safest
buying
ones are the ones where there's $60
cash
million
on cash.
in the bank. And
cash
in
on
that
cash
case,
and scalable.
You just need the coins in that case.
It's not always coins,
right?
though. It's not always coins, though. I'm
no,
assuming
but
this
he needed the
across.
coins to be able to have a claim on that money.
No, I agree, Rod. But I'm just saying that I think this was more broadly across all of the different domains of.
Yeah. So that's what I was going to ask next. Like I remember in 2008 in Canada, there was a lot of special sits of mining companies that had raised a ton of money, but were dead because the commodity boom had ended, and they were like selling at 20 cents on what they had in the bank without any burn because they shut everything down. So that's the type of like safety that you talk about. That is that what you mean?
It's just so. Is
this the pornography question? I know it when I see it.
No, it's not. It's not. I know it when I see it. I mean, it's just experience. It's experience, man. I mean, like, I mean, when I first started, like, I definitely took some wallops on claims where I thought it was great because it had some priority and blah blah blah. And then I was like, oh, but then they can challenge the validity of the invoice or something like that. Like things that you don't know going in. So Quadriga is quite simple. Like I can't remember the actual numbers, but they were paying 10 cents on the dollar. The plan value was 12 cents. There was 12 cents in the bank. There's probably 13. So they're making 20% return just cash on cash. And I suppose real estate guys think in this framework as well, which is like, what's my cash on cash? And then if I get a bump in the actual NAV of the property, hey, I'm whistling. I'm doing good. So I think in claims, people sometimes think similarly, which is like, hey, I'm paying 33, I'm making 37 or 40 or whatever. And then like, hey, there's this lawsuit where I might make another 10% return. And so that's a freebie. So they look very similar to liquidations, and they do run the gambit. I mean, we try to do the more complex stuff where we think we can make a higher return, but we are taking a little more risk. So like we get involved in maritime liens and mechanics liens and M&M liens, which are, I can't remember the first part, but it's imminent liens are like on oil and gas rigs. So it's on oil wells. So we've gotten involved in a few oil and gas bankruptcies. I will probably never do that again because it was so much work and for a unit of output. But like I said, like earlier on, like part of what we do is a fine balance between return, like absolute return, and then like actual scalability. It's like, oh, this was great, and we made $6,000, and that was a total waste of time. So stuff like that does happen. That's our risk that we take, as opposed to, well, you still take principal risk, but there's less principal risk. It's more like, can we really scale this, and can you really paper it?
Do you get excited by some of the meme stocks and the rips going on and some of these sort of what people would consider potentially worthless opportunities? Or are you like, no, that's my paper. That company should go to business. Those are my claims. Like, how do you? No, I'm jesting a little
play
bit.
It as it lies.
As it
Mike,
comes,
I like all. I mean, it's funny. I remember Hertz early on in the case. We tried to buy claims early in Hertz, and then people were saying, oh, well, they're able to sell some of the cars at higher values than they're marked in their books, and like maybe this was early in the case, and then fast forward to recently, the stock went from $1 to $8. And I'm not saying like the meme stock people were right,
but now who's laughing?
Yeah, who's like? I mean, I don't know. So I don't really have a view on this stuff. I sort of think it's like, I'm a big believer in, for myself, I know distress because of just, it's like a sort of inculcated in me, but
in your DNA.
My real investment sort of philosophy is probably like, for myself, is very like Buffett and Soros mixed together. If they made a love child, it would be like,
it would be you.
They made a
buff horse.
Because I love Soros. I'm just like such a Soros like nut. I just love the way he thinks. Like it's very like mathematical and logical to me, and I just like I love that. I don't know. Maybe
I saw your post about Soros and Soros. I hadn't heard of the book. Is it good?
Best.
Okay.
It's our Byron. I think Byron Wayne is the interviewer. Byron Wayne is like a very famous like macro. Yeah. It's like him. It's about Byron Wayne basically interviewing George Soros in like the 80s, maybe it's 80s, but it was before he was like ridiculously famous. And go ahead.
Sorry, I thought you were.
No, please.
So when you're not working on the actual, like you found some bankruptcies, you're working on the bankruptcies. When you're trying to source them, like what's your process? You talk a lot about like art, and like do they just fall in your lap because you've been around enough? Is there a community of people that are in like a private Reddit group that point you to things? What is it?
It's called Google Alerts. You just put Google Alerts bankruptcy, and you look at every single company that goes bankrupt. No, I mean I'm joking around, but like you sort of you can waste a lot of time on that, but it does lead to opportunities. And for myself, like I don't know, man. It's just like, how does anybody find any opportunities? You sort of like you have like a multivariate approach. You're screening, maybe you have Google AdWords. You're also talking to people. It's like it's sort of multivariate, but it's never rarely does it like fall in my lap. I wish. I'm waiting for that to happen. When it happens, then I'll know I've really made it. But until then, I'll have to offensively look.
Do you find so as you find deals, you find some small ones. You said, well, this is only big enough for us. But as you found some of those bigger deals, does that come your way as well, where there's sort of a group of buyers that you all kind of coalesce around something, or how does that work?
Oh man, distressed people are. I mean, y'all are basically quants, right? I feel like quants are more like a little friendlier with each other.
There is definitely a distress. What D&D character would you be if you were distressed?
D&D character? I don't know what that is. What, Dungeons and Dragons?
Exactly. Okay. Fucking ignore that question, please, and let's strike that from the record.
That's totally a quant reference.
I think it's I I don't know. Distressed
You're
guys
like a
have really
thief.
sharp elbows. But they can they can be friendly. People will club up on deals. I would say that like, when we have a family office to work with, so we really do always show it to them. But like on the crypto distress, when it's really, really juicy and it's small, we'll just take it ourselves with our own proprietary capital. So I assume it's similar to like a prop shop. You know, you have like products that you're offering to clients, maybe, and then you have like, well, this is kind of hairy, but like 10x. Okay, I can take that on. No, but yeah, I mean, I'm not
totally.
really jesting. It really is risk. I mean, it's not free.
It's usually very convoluted, complex risk that if we're going to hold ourselves to any sort of standard that the client has to have an idea of what's going on, you look at this and say, well, there's no possibility that the client can actually contemplate all the dimensionality. And I can't take the time to explain it to him because it's too small anyway. So,
right.
And also sometimes they're fleeting. Like the time it would take you to sell someone on it.
Yeah, it's gone. Very good point, Dave.
That's interesting. So
Dave,
what is the you got an alpha, you have the single family office, you have your own wealth. I'm trying to think through what the quote unquote diversification benefit of something like that is, and I guess it varies, right? Because if it's Bitcoin, then there's some you're at the mercy of Bitcoin beta. If it's cash in the bank, then it's not correlated at all. You just have to. It's just time and patience. But is generally speaking the stuff that you're looking at susceptible to recessions and growth?
Yeah, I mean the crypto stuff is very crypto correlated, especially at the price we're paying. But most of the stuff we're doing is incredibly uncorrelated.
Right.
I mean, I'm sure there's some correlation at the tails. So like merger arbitrage. It's like, oh, merger arbitrage is uncorrelated until a bunch of deals start breaking. I suppose for ourselves, like if you think of you're buying a bunch of claims and they're predicated on 363 sales being consummated and they break or something like that, or plans falling apart because the market just totally tanks and the financing fell apart on this. That could be a thing. But when you look at the numbers, it's incredibly uncorrelated. I think it's more correlated than the numbers show, because it's like it's like one of those things where it's like you don't see it.
It's accounting-based NAVs until the event happens, and then you're like down 20 to 70.
It's like oh my god, look at this! It's like it's totally uncorrelated. Then it's like
it's a straight line up.
All the financing, all the exit financings fall apart at the same time. It's like, oh, look at that! Isn't that interesting? Like, no, it's obvious. It's not interesting.
Yeah. It's not interesting at all.
Yeah,
especially when it happens. It's not interesting. No, not at all.
But for the most part, the returns on the claim side of what we do, frankly, they're very high, and so you probably could easily compensate for the risk of like
deal break, the default risk on the deals and whatnot. How do you explain it to allocators, or how do allocators try and bucket this? I think sort of an extension of what Rodrigo was asking, like. From an institutional perspective, how do allocators look at you, bucket you? How do you pitch to them? Or are you even bothering with institutional? And if you are,
we don't
how
really,
does the space
we don't. But I would say, just from my understanding, is a lot of large distressed hedge funds try to do some of the stuff we do, and they do it well. That's fine. But for it doesn't really move the needle for them because they're like very large firms. So think of like Avenue, or I don't know, like. Trying to think of somebody. Just name your favorite large distressed hedge fund.
Yeah.
Silver Point. I'm trying to think of people that I don't ever talk to, so I don't want to name anybody who's like, oh, can't believe you mentioned me on a podcast. So like Silver Point or somebody. Not naming names, but Silver Point. No, these firms, they're running $2 billion, $10 billion, $1 billion. Like, what's $50 million in trade claims? What's a $10 million dip, even if it's 24%? Like it's kind of like, for them, they're like, hey, this sounds great. You should really call the guys in my family office. Other than that, like, I got to get back to work.
Right.
That's
so is your layer of this just really focused on those smaller allocators like family offices? Then is that the sweet spot, or is there any other small niche institutions that do it, or is it largely Now
I've met
it's
a
just
few. I've met a few. So like,
okay.
let's see. Well, smaller institutions. So Blackstone bought like the largest competitor in our space. It's called CRG, and their Tactical Opportunities Fund bought like basically the largest player in the space. The guys are all cash players. So they buy so cash on cash claims. They pay 85, 90, 95 to make $1 in 3 months, 6 months. It's literally like factoring. Think of it as just like complex factoring.
Yeah.
And that's one side of the business. And then there are some smaller firms. There was one called like not Oak Hill, but I think it was Oak Hill. There are a few firms that have sort of like given capital to guys in our space. And I totally respect that. I think it's a great. Again, and there was even Seaport Group, which is a broker in our space. They got in bed with a family office, and can't believe I use that on live television or live Twitter. They JV'd with a large family office and started doing it. And what they did was quite interesting. They were using bankruptcy trade claims as a way to acquire customers for their factoring business. So they said, we'll set up a factory business. And one of the biggest issues that companies have is they don't switch once you're a factor there. So it's all kind of market rate. And there's like lots of competition. So like, oh, what's an interesting customer acquisition strategy? Well, we'll offer them factoring when others won't through bankruptcies that we think are 100% repays or we think they're critical vendors. And we can unpack all, critical vendors and stuff like that. But these are all like esoteric things. No one's, I'm not saying people can't make money at, but it's hard to, it's hard to really scale this into.
You don't want to be a tourist here.
It's not a tourist. It's like, I don't know, man. I mean, it's just very hard to actually make it into a business. Like even guys that do like small liquidations or nets or like, micro cap equities. I'm like, this is really cool. I hope you can make enough to make enough. Like hope you can make enough for your investors that you can make enough for yourself.
And so what's typically the fee share in this area?
It's all over the map.
You don't have to answer that if it makes you uncomfortable.
No, not for you. Generally, hypothetically, for the market.
I didn't even think about it. I mean, I think people are all over the map. I think that there are brokers who just broker the stuff to hedge funds. The little secret of distressed hedge funds is they don't actually find any of their own stuff. It's actually through a lot of brokerage firms. And then, hey, we're open for business on bigger stuff if someone wants to help. And there is some real, the brokers do play a role. I mean, there is value that they add, and all the way to the other side where people are taking, only promotes, and that's probably where I like to sit because I feel like I know what I'm doing. And maybe what I'm doing is not super scalable, but at the same time, it's like if I can, bag an elephant, I'd prefer to take a promote. I'd prefer to just pay me when you make money.
Right.
And so it does run the whole gamut, from 1 and 0, right? So just a broker.
Really just a management fee sort of thing or brokerage fee on it.
Or a commission, 1% commission.
A commission. Little schmiggle,
little vig,
little something,
little vig for the house in the action. So
I like those guys though. I like the brokers.
Good. You seem to get along with all the players. I think that's some of the alpha. Respect for the holders, respect for the brokers. I see your game. Your charm is the alpha.
Somebody that doesn't like me is watching. No, I'm joking. I'm hoping like some bankruptcy professional that I've offended deeply by a really terse email watches this and says, "Oh, Tom isn't always so mean." No, I'm not very nice.
They'll be on the next week podcast.
Well, here let's just start with easy questions, and I'll get some vitriol going. Which of the bankruptcy firms that work these things out of bankruptcy is the most incompetent?
Stop! Don't answer that. Stop. So
equal.
What?
My thing, if you want to get me on my soapbox about bankruptcy stuff, and this is like something that goes deeper than money because like my parents really were attorneys and my mom really is a bankruptcy attorney. My brother is a Chapter 11, attorney in North Carolina. So Yeah, my brother and my father-in-law is a panel trustee. So it just the things that get me on my soapbox.
Niche family.
Yeah, I don't know about that. I don't know. I mean,
Get on the soapbox
um,
first. Get on the soapbox.
okay, the soapbox would be there's way too way too many conflicts of interest between like firms and like clients. And oh, you did pre-petition work for the debtor. Oh yeah. No, it's all good. That was like 2 years ago when they were doing M&A. This is totally different. Way too many conflicts of interest between firms. Way too many conflicts of interest between these independent directors. I mean, it's a joke. Like private equity sponsors using independent directors. It's like, David, I'm sure if I pay you $100,000, you can be my guy, right? On the
I'm here
board.
for you.
I mean, it's such a joke. No, sorry, I don't mean to use you, David. Like call you out. And then the third is like, so conflicts of interest, and then like, yeah. So in the forum shopping. Oh my God, the forum shopping is insane. I mean,
What
they
does that
all
mean?
try to get
What's forum shopping?
forum shopping is like trying to find the judge that's going to give you what you want.
Oh.
Yeah, right. So if you're the
do that?
big time,
Yeah,
oh
you
my
can
God, are
kinda-
you kidding?
Yeah,
Are
no,
you
we didn't
kidding?
know. We're a bunch of
Is that a
noobs
question?
right here.
Oh my God.
We're about to go
Dude.
bury our money in the backyard.
You're like, David, let me tell you something. I know your family business is going under. Judge, Judge Jones, he's your guy. All right. We're going to file. It's going to be great. He's going to do everything you want. He's going to make this all go away. Don't you worry. And the forum shopping is insane. They forum shop judges. So they basically file companies and jurisdictions they have no business filing in. So they can control cases, so they can get critical vendor motions passed, so they can get judges to agree to stuff that no other judge would agree to. But, if they do it in front of that judge, and so the issue is the judges have the incentives to agree to stuff because they're like, well, I want all the big creditor, I want all the big debtor, I want all the big cases here. So I should probably agree to this. So it's like the lowest common denominator.
Aren't there many judges
So
per
the
jurisdiction?
Yes, but you can you can basically select your judge. You can basically select your
Okay.
judge.
And
There's only a
I'm just
few
trying to
in that
think of
case.
the incentives here because I'm from Peru, as
Yeah,
you know. The
go through the
incentives in
incentives
Peru
is the
would be
easy-
how much
yeah.
money can you give me directly? Like, here's my bag, put the money in, and that's how it
No,
works.
it's very
there.
simple.
The incentives in
It's
this
like-
case is more like I just want a high-profile
cases.
cases in my jurisdiction.
I want high-profile cases so I can do high-profile decisions, so that I can have big debtor cases, so that all my friends can get big debtor cases, right? I mean, it's all.
Right. It's all a vicious
mean,
circle. All their attorney buddies that are not in the public system.
Yeah, of course. Yeah, of course.
Oh,
Of course, they're
okay.
friends.
Damn.
It's not a bad thing.
That's
They're
crazy.
friends. It's just the forum
It's-
shopping
it's-
is insane.
I guess human nature. I had no idea. That's crazy. So you can just go around the whole of the U.S. to shop with the one
Oh my God.
that you want.
Oh yeah. Well, they don't really
And then
shop.
create
They have
companies
two
and
judges
establish
they
them.
like.
Would you like the red or the blue one?
Yeah, exactly. No, they all file. I mean, you can file in Southern District. They all file Southern District, Delaware, or Southern District of Texas. And the reason is because the judges are so god darn debtor friendly that it's almost a crime. That's okay.
Wow.
I'm willing to fight
Well,
back. I'm
yeah,
I'm
of
kind of
course.
like we're kind of like our alter ego. We buy claims and we're trying to make money on this stuff, but our alter ego is we fight back against this ridiculous stacked against this debtor system. That's what I
Amazing.
like to believe. There's no real
Yeah.
actual
No,
social
you
value
have
to
a
what I
purpose
do.
in life. You got a purpose in life. We all have to do our
You
own
guys
mental
didn't know
gymnastics
this?
in this
I
business.
mean, I guess it's sort of a backwater.
We had no idea.
It is because of the Venn diagram of where you live that you know these things, right? It is precisely the fact
Yeah.
you're in it every day. We wouldn't. That's why I love getting little tidbits like that you think are sort of commonplace, where everyone knows them, and the rest of us are sitting there with our mouths open, going, "Pardon." We thought the
Well-
world was righteous and true.
It's kind of like the Gell-Mann amnesia effect, right? Where you look at something incorrect in your own side of the business, and you're like, I can't believe this is happening. This is absolutely absurd. It's bad for this person, the conflicts of interest. And then you hear the bankruptcy side, and I'm like, well, that must work like a well-oiled machine,
Smoothly,
right?
Right,
just-
unless you see the sausage. Yeah.
Yeah.
You're like, ooh, that sausage not so good. No, I'm a big believer. I have a few. Well, the other soapbox would be like, I'm a big believer that the progressive U.S. bankruptcy system is a huge like boon to the U.S. economy compared to a lot of foreign systems. We get involved in a number of foreign jurisdictions, and the laws are incredibly draconian. I mean, they send people to jail for insolvency. It's amazing. I mean,
Really?
it sounds ridiculous, and they're trying
So
to pull
compare that
back.
to another jurisdiction like Canada or Switzerland. To give us some showing point.
Yes, Switzerland or EU sort of systems.
Yeah.
They're trying to harmonize, whatever. Harmonize the systems. It's kind of working. It's not really working. It's one of those. I'm sure it's like a lot of EU regulations. I'm not involved in other parts of EU business, but I assume it's similar, which is they say it's working when it's not. In terms of harmonizing the systems, a lot of them are draconian. I think Germany is the worst. There's some other jurisdictions that aren't great either. But
Is Germany the one that
if
if certain bankruptcies will land you in jail?
Yeah, most definitely.
Wow.
Not even as a proprietor, but as a director.
Wow.
I mean, imagine that. Imagine what that does to the capital markets. Imagine what that does to the credit markets.
Risk taking and
of,
whatnot
of
too.
a company. Yeah, the risk taking. And what it does is it helps the incumbents. Because people with a lot of money can bankroll the stuff. And then anybody that wants to try something on, wants to try a new idea, it's like, bankruptcy's not so great here.
Yeah.
And so it basically, to me, it favors incumbents, and I'm not in favor of that. I think
Right.
people should be able to try things,
Yeah.
without committing fraud. But people should be able to try things. If it doesn't work, you should be able to wash the debt.
The investors that were participating should know the risk level approximately of what they were getting involved in, and they should be able to understand that to some degree. And if they take those risks, losing those monies is fine. I mean, you also have the 10 baggers on the other side of that. So the U.S. is
baggers,
really,
but yeah.
100 baggers. So the U.S. is like, well, how does it compare to Canada? Is Canada draconian, or is it more?
No, Canada's not so bad. Canada's CCAAs, or I don't know what the actual phrase is, but Canada's pretty progressive. Canada. So most of U.S. bankruptcy law is predicated off of the English common law, and Canada's an English Commonwealth country. So it's actually not so bad, and a lot of the gift to the world, and this is like really getting legal, but the gift from sort of England outward to the Commonwealth and other countries, English common law was like the first idea of like instead of following rules, we're going to follow principles, and this idea of like equity, courts of equity. This is like, there's no law for this, but this is the equitable outcome. That was an English court of equity idea, court of chancery, and then it was sort of exported. And that was such a powerful idea, so simple, but it's so powerful. And then the American bankruptcy system kind of went with that. It was like, oh, well, 105, if you use the U.S. bankruptcy code, it's basically allows the judge to do whatever they want, as long as they think it's
right. So
equitable.
the fairness comes at the judge's hands.
Right.
Whatever the
judge
judge
gets
decides,
to
they need to
decide.
kind of write out the reasoning, and this is why it's generally fair. And is
They can basically rewrite it.
And therefore, judge selection is incredibly important.
Oh yeah, back and forth shopping.
You
That's full
trail
circle,
crumbed it.
baby.
I got it.
so just to get something clear, because I understood, where does precedence fit into that framework? Is the common law framework specific to bankruptcy in terms of fairness, or can you also look at precedents can the judge use precedents in order to come up to a decision, or is it part
Oh
of
my
that?
God, you're gonna okay. So I'll answer this as a non-lawyer, and then I'll also say that
Just call your brother and parents. We have a call a friend function. The button on the
call a
bottom
friend. What's that right here? There's like a long-standing debate whether bankruptcy courts are courts of equity. I think they're courts of equity. I mean, it's without a doubt. I mean, 105 basically sets it out. I think it even says it's a court of equity, meaning that the judge has a unilateral power to determine that. But of course, they look to precedents, and of course, even if they're ruling on 105, they're saying, "Oh, the equitable circumstances, mean that I need to come to this conclusion." They're still going to look for case law, because it makes it harder to overturn. If someone appeals it. But my favorite thing about every whenever you're down to a bankruptcy hearing, every time you're in any sort of hearing, bankruptcy court hearing, the last argument by any attorney will be, "In Your Honor, if you don't like any of those arguments we've just made, we'd like to remind you that 105 still applies to this matter. And if Your Honor feels that it is in the best interest," and I always love that.
So if we haven't figured out a good argument, you can figure out a good argument on our behalf. That's amazing. That's some great lawyer right there.
Yeah, like, "I'm not that smart, Your Honor, but Your Honor, in his infinite wisdom, I'm sure can see that this is inequitable."
So good. And the lawyer now, I mean, how you're sitting there on the deck as the lawyer. Why, like, how many times have you heard that every time?
Oh my God. 105. 105. If you're not persuaded by any of our arguments here, Your Honor, we'd also like to point you to 105.
I love it.
Anyway.
So Dave, any other stories that you might have heard from Tom in the past that you think the audience would benefit from hearing?
There's a story I don't know that I do want to hear about, which is the Titanic.
Oh, maritime
really?
claims on the Titanic.
Oh, that's fun.
Yeah.
That's a fun one. I could talk about that.
Great. Well, we're at an hour and 15. Why don't we hit that one and then we'll wrap. I know it's late where you are too, Tom. So.
Okay, I'll be quick too.
No, you don't have to be quick.
No. So, I mean, this is part of like what I'm myself trying to grow my business and thinking about things in the past that I might have not taken advantage of. We bought claims when I was running my hedge fund in the RMS Titanic, which the actual parent company was called Premier Exhibitions, which is a small public company. And talk about soapbox, like the administrative fees in the case got it filed for bankruptcy. As I said, all my stories are about bankruptcy, so I apologize if you were hoping for.
Nope, that's what you're
Everybody
here for.
was well.
That's what we're here for.
Yeah.
Okay.
We're here for the morbid bankruptcy stories.
Yeah, morbid. It's actually not so bad. So in this one, they had the survivorship. I think it's called the survivorship rights. But basically, they had the rights to own the site, but they didn't get to. Technically, you can't file like a UCC1. You can't file like a security interest on survivorship rights. It doesn't make any sense. And they also had like, I think 5,500 artifacts. There might have been 5,000 artifacts from the Titanic. So, when you watch Titanic and, Bill Paxton is like, with the submarine and going down, that really happened. And there's this guy named, I think Robert Ballard, that's his name. Robert Ballard. He was a famous oceanographer. Everybody can Google this now. Robert Ballard. I'll say it slower. And he actually went down there, and that was part of Premier Exhibition bought his company. And long story short is they got a little over their skis on a few exhibitions. They were a for-profit exhibition company. So what's exhibition? Like, you pay £20 to go to the, like some like Beatles Mania exhibition or,
okay.
I don't know, like Advertising Hall of Fame.
Yeah.
And believe it or not, some of these are for-profit. It's sort of a smaller industry, but it's out there, and a lot of nonprofits outsource, the design and the running of these because it's a lot of work. And what they can do is they can port these around the country or around the world. They can do like a Downton Abbey. They can do one in New York, and then they can take it to Portland, and they can take it to wherever. I think I just lost my audio. Can you guys hear me?
No, we can hear you.
Yeah. Yep.
Okay. So long story short is we got involved in the case. I'm not sure where I'm going to go with this, but I'll just how I would tell it was there was no secured debt pre-petition. There was $3 million of pre-petition secured debt. There was $13 million of unsecured debt. The business was doing something like maybe $2.5 to $3.5 million of EBITDA pre-petition. So you're thinking, oh, that's interesting. And then also pre-petition. They tried to sell the assets off, and they got shut down by the French government. And I think the sale estimates were something like 100 million. So you're thinking, oh, would I buy claims? $100 million, 200. There's only 3 million ahead of me. I'm making 2.5 million of EBITDA, and 5 times I can pay 50 cents on the dollar for those claims. So we bought claims, and the case went a little sideways. They couldn't get what's called DIP financing. They couldn't get debtor in possession financing. We got involved on the UCC, and then I tried to find cheaper DIP financing because it was very expensive. And then the DIP lender came in. They were just a credit fund. They insisted on doing what's called a 363 sale versus doing a liquidation, which I thought was stupid. Because the creditors and the DIP lender, we could have taken the business over for the whole debt. So the DIP lender came in at 5 million. So 5 plus 3 plus 13, right? I mean, that's not insurmountable considering what the asset was, right? And remember the 2.5 to 3.5 million of EBITDA, that was a really crappy management, So imagine if you actually ran this thing properly. Anyway, so I thought it was interesting. I want to take the business over. The DIP lender wanted nothing to know about it. Didn't want to hear anything about it. And it was a real lesson for me. But we did buy claims. We made money. And there was an equity committee in the case. There was a guy that's like a famous activist who was his name's going to escape me, Andrew something. And he has this like moniker as being like the longest running activist hedge fund manager. And he's a really nice guy, but he was just a pain in the butt in this case. And he just ran up a huge, huge burn on the estate. Not that he wasn't entitled to, but I think it was out of place. And it was very similar, again, kind of back to form shopping, which is the judge really let them run away with the case, and he shouldn't have. Sort of like the judge was too busy, I don't know, sort of being too nice. It's like, I can be nice. A judge has to be like the guy who's like, no, like he has to be the adult
parent.
Yeah, he has to be the guy that's like, no, there's no more ice cream. All right. So anyway, so it was an interesting case, and it involved a lot of maritime law. I didn't know anything about maritime law and survivorship rights. Somebody could correct me in the comments, but it was super fascinating to learn about the Titanic and about the process of like how they actually went down there, and then all the maritime law and how it works. Like where it's really more about like if you're in international waters, it's where you come back to shore. So like the original expedition, yeah, it's about where you come back to shore. The original and who funded the expedition. So like in the original expedition with Jack Ballard, it was done by the French in like 84. And that was unsuccessful, but they got some stuff, but it was quite unsuccessful. And then there was an American expedition in the 90s that was quite successful, and they brought a lot of stuff back. And so like who owned what part of it, and like who had the rights, and it was messy and interesting. And you never really owned any of the stuff you bring back. You're only allowed to own it in a trust. Very complicated. So you're allowed to profit off the trust. You're the sole owner or
but you
user
can't keep
of
the
trust.
necklace. What was it
But
called?
you don't get to keep it. The diamond of
was
Coco.
Diamond of the Ocean.
That's right, something like that.
Hope
I don't
Diamond.
think that was real. I didn't see that in the
Real in my heart, man.
in the schedules. It was
That
really
might have
Gift
been
it to your
some,
wife, though.
That might have been some creative
really
writing
hard.
to bring some saliency to the story.
That case was so much fun though, guys. Honestly.
Yeah,
Amazing.
love it.
Well, this has been great, man. Dave, you're absolutely right.
Was
What
it
an
Andrew
incredible,
Milgram?
Series of stories. Tom, so what are you? You're in Italy right now. Like, are you working out of there to hide from the whole
Yeah.
coronavirus thing, or
I've been here
are
all
you
of
based
COVID.
out of there? Okay. What part?
Been here all of COVID. It's a place called Forte de Marmi, which is in Tuscany.
Oh my God, you're in Forte de Marmi? Oh my goodness.
Everybody knows Forte.
Are you on the beach every
I'm
day
trying to
or
like
what?
slow down the carbs, but yes, I am on the beach. No, we're not on the
Amazing.
beach.
place.
We're like 10 minutes.
No, but
you been to
you
Forte?
go to the beach. Yeah, you go to the beach
Yeah.
and you rent one of the things, the little carpet down the middle to the
Isn't it
the
great?
sand. It's spectacular.
So David calls me yesterday and he says, "Oh, Thomas, are you are you, what are you doing? I was like, oh, I'm camping. He was like, what do you mean camping? Or no, it's today. Or no, yesterday, bro. I said, oh, I'm camping at the beach. He was like, you're camping at the beach? I was like, yeah, like Italian camping at the beach.
Italian
There's
style.
like, they
It's
bring you
so good.
aperitivos.
Little
and
cocktail.
Oh,
they bring
you have a little
cocktail.
umbrella. You've got
Little,
like,
little
these
tight
chaise-
shorts.
The chaise
Oh, that's
lounges,
right.
Speedo.
The tight
all
shorts.
fluffed. They bring you your towels. You got a lockbox for your stuff because if you don't put it in a lockbox, shit's gone immediately. Then you look back up at these massive mountains in the background, and I'm sitting there staring with my wife, looking at these beautiful white encrusted mountain peaks, and I'm going, "Wow,
That's the marble.
exactly." It seems like it's a little warm here to have snow on the top, and somebody looks at me like gives me the, "That's marble, you idiot." Because I thought I didn't know. I'm like, it's my first time there. I'm looking up. I'm thinking it feels too warm to have snow. It doesn't look high enough to be snow, but I guess it's snow. It's marble. The peaks of the mountains are pure marble.
Like Carrara marble is, Carrara marble is like very close, and Michelangelo,
totally.
like was getting his marble from just up the road here.
Yeah.
So it's
Nice.
very famous for sculptors and things like that, and
Have
artists.
you-
There's quite an artist community.
Oh yeah, huge. Have you made it over to Cinque Terre or anything like that, and kind of
I
spread through
haven't.
Oh, you have
crazy.
to.
So we've been here, and I've been to Piacenza and Pisa and Florence, but I haven't been to Cinque Terre. And I've been working a lot.
must.
It's been a little bit of a distress cycle.
Oh, yes, it would have been. You can imagine. A little bankruptcy here and there. That's good.
stuff
It has
happening,
been.
guys.
We'll bring you back again soon so we can hear the new war stories, the latest quirky things that you're working on. I love it.
Oh,
Before we
well,
go, Tom,
thanks.
where can people find you? Where
I have
your website, your Twitter handle, LinkedIn? Where do people go to learn more about you, listen to you?
I should change everything. My last name's hard enough to spell, but it's Thomas Brazil at Twitter. Like just at Thomas Brazil, and then 507 Capital. But yeah, I mean, I'm always open to chatting with people. I've met so many great people, like you guys, like through David or through social media and then Twitter. Really, I'm like blown away. It's fun to connect with people because it's such an isolating time, with COVID and everything. So it's been amazing to connect with people. And in a way, it's probably better connections, right? Because I mean, you guys aren't in New York, right?
Well, this
You're-
whole thing
you're all
started
over
because
the
of COVID. And we got to
Right.
meet a bunch
Oh,
of
that's cool.
amazing people. Yeah.
It was everyone was missing their cooler time, right? So you want to sit at the office and talk at the cooler. We're like, well, why don't we do happy hour on Friday and have a beverage and meet some interesting people and talk about stuff that we would like to talk about in person but can't. Now, I will say though, all the chatter when we were before the call and you were interested and jealous about Cayman, I did not know you were in Forte de Marme, so I don't really think you have any ability to have any jelly bones in your body.
Yeah, well, I
just
pay
imagine.
I pay high tax because I still pay tax in the States as an American. So, but yes, I mean, I'm jealous of your tax regime.
Oh, that's fair.
Well, thanks, Tom, Dave. Dave, actually, do you have? You're on Twitter.
Yeah, where can
I'm on
people
Twitter.
find you, Dave? Yeah,
what's your
At
Twitter
Defauchier.
handle?
At
Defauchier.
Defauchier.
Okay, at Defauchier. And
and
of
Nickel,
course,
right?
Nickel.
Nickel the plug.
What's
Yeah,
the
working at
website for Nickel?
Nickel.digital. Pretty easy.
Nickel.digital for the greatest alpha you can find in the digital space. Go check it out,
That's
ladies
true.
and
You heard it
gentlemen.
here
And
first.
just for Mumbles McGee over there, it's at Tom Braziel, and it is 507capital.com. So if anybody wants to find Tom or David, you can go see them in their respective Twitter accounts and websites. And thank you, gentlemen, for joining. We will have you back again, I'm sure. And enjoy the rest of your summer.
Thanks.
As well.
Yeah, don't
Everybody
forget
like
to
and
like
subscribe.
and subscribe.
Smash the like button.
Yeah, smash
Smash
it.
Um,
This episode is brought to you by Resolve Asset Management Inc.'s separately managed accounts, available for U.S. and Canadian investors. While diversification is often discussed, it is important that it actually be delivered. Through the suite of Resolve Global mandates offered at varying risk levels, we aim to strike the balance between global diversification, appropriate risk balance, and directional alpha. Our portfolios are designed to safeguard and profit across many economic regimes, including periods of negative growth shocks or unexpected rising inflation, periods in which, in our view, the traditional 60-40 portfolios may fail to deliver adequate returns for investors. Resolve to improve your portfolio. Click on the link in the description to reach out to a representative and assess which Resolve mandate is right for you.